Welcome back to the investment challenge. Today we have a very interesting topic. It's about another leading indicator. Leading indicator just means you can use it to predict the US GDP, and the things that can predict US GDP can also predict the US stock market, because the stock market itself is a leading indicator to the US GDP, because all the people that have money are betting on the economy through the stock market. But we are talking about the University of Michigan Consumer Sentiment Index, or short form is UMCSI. And this is a chart I made back in 2016, but it's still relevant. It's just a little bit outdated, but it still works the same today. This index is a little bit different to the ISM PMI or the ISM non-manufacturing PMI, because you don't have the 50 mark baseline here. You just have a reading. What you can do is just calculate an average. I don't know, I'm not a master of Excel here, but we can look if we can do it shortly here. No, we cannot, but it's not so difficult. I just don't know how it works now, but if you do it for yourself, you can just calculate an average, and it will show a line maybe here at this 80 reading. This is just my guess, but so you can calculate that average and just use it as a reference point, just as the 50 mark in the PMI or the non-manufacturing PMI. And what is this consumer sentiment index displaying? It's just a questionnaire, a survey that is answered by normal US citizens. And when you think about the economy, a lot of that is driven by the US consumer. So when you are in a good mood and you think, everything is going so great, I have a nice job, I can buy I don't know, the new iPhone every time I want, and I think the US is growing, then you will think, okay, I can spend my money because new money is coming in. And when a lot of people think like that, then you will fill out this questionnaire more positively, and so it's going up because you think everything is going great and it will be staying that way for a few months. And when this is going up, the consumer basically think the economy is going up, and same in the other direction. And now you can see that we have a high correlation between the UMCSI and the stock market. So as you can see here, the tech bubble crash, we had here very high readings, then it came down, the UMCSI came down, and shortly after, the stock market came down. Same here in 2008, it came down, and shortly after, the stock market came down. And if you remember the last videos for the ISM PMI, it was a similar thing. So it's always, or I use it always as a third way to predict what the economy is going to do. So I will pause for now, and we will then look at a more recent time series to maybe predict what is going to be happening in the next 3 to 6 months with the US GDP. 1 second. So it took a while. Sadly, it's not very well displayed in my Reuters platform, but you can just use tradingeconomics.com. It's completely free. And here you can clearly see the blue line is the UMCSI, and the dotted line is the US GDP annual growth rate. And here you can clearly see the correlation. And when we zoom in a little bit, you can see that the UMCSI dips a few months before. So as I said, you can really use it to predict the US GDP. And when you combine it with the other two leading indicators that I already showed in another video, the ISM PMI and the ISM non-manufacturing PMI, then this is a really good tool to determine if you should invest in the stock market and what stocks to buy, cyclical or defensives. And maybe another or some words to this page. It's really useful because, as I said, it's completely free. You can compare GDP, you can compare interest rates, which is quite good for forex trading. And you can just go here to indicators and let's say, look at GDP growth and can compare countries. You have a world map where you can see, okay, where is growth, where is contraction. It's a really cool tool, and it's completely free. So if you don't want to spend $100 for the Reuters platform, this is very great to get the free information. It's very easy, and you should definitely use it in your trading process. That was the video about the University of Michigan Consumer Sentiment Index. What a word or a sentence, or I don't know. I hope you learned some things today. If you have any questions, just leave your comment below and I see you soon.